Alright guys, so let's get started with the presentation. So today we're going to talk about poly markets, and I'm going to take you guys through everything that's been happening in our society and why this was born in this specific point of time. Also how the finances work, and also how that involves crypto. So this is the average chart that you will see when you open Polymarket. So this is the UI of Polymarket. And what prediction markets are they're a binary option of something either happening or not happening. So usually it's pretty simple. It gets a little more complicated when you have a couple of choices like you see here. So this is the presidential election winners of 2028. And it starts getting a little more complicated when you have different decisions that you can choose from, but it all operates the same. It's a binary outcome, so it's either 1 or 0. And you can, when you see it, so this is the buying yes, which is 22 cents. And this is the buy no, which is 77 cents, which adds up to 1. Then down here you have 17 against 82, which also adds up to 1. So each individual choice is a binary option. You either win or you lose. And then the probability of that happening, you can plot them against all the other ones. And that's how you get the probability of that itself. So, yeah. The difference between a probability market or a prediction market and the traditional finance is the wide range of things you can bet on. You can bet on politics, sports, crypto, finance, geopolitics, earnings, tech, culture, world, etc. And I just put some on here. For example, will US strike Iran buy? And you can give us, you're betting on a specific date. Which company has the best AI model by the end of June? The Fed decision in March, which is for rates. And will Jesus Christ return before 2027? So all that this is an options market, which I will explain later. And I will explain how it's a binary option. But for now, all that you have to know is that there's a lot more themes that you can invest in. Pretty much this technology, the only thing that it allows us to do is place bets on a wider range of themes. And this technology comes with a broader societal shift for our generation that a lot of different companies are trying to get us to bet online. And this is a shift that we see that I want to show in this chart, which is the rise of retail traders. A retail trader is an individual trader, and the opposite would be an institutional trader. And what we see is that in 2022, we see a huge spike in volume of people starting to trade. And what happens in 2020 is that we get COVID. And in COVID, we get a lot of people that are bored at home. They have access to the internet, and they're getting stimulus checks from the government. So this is the point where everyone starts going online, betting on markets, and this is why we see this raise in volume that we have never seen before. The other thing we see is that in 2018, sports betting becomes legal in the US. And after the 2016 elections, the political landscape also gets very polarized. And these are all things that have led to this moment in time where placing bets on Polymarket or on Kalshi has become commonplace. We can also see in this chart, which shows you the US sports betting market. It's a really good market if you want to make money. The ethics of it are, they're not that good, but you can see that the growth is definitely there. This is a pretty messy slide. I wanted to keep it this way to show you guys just how many companies are trying to bombard you, trying to get your money online for you to invest. So we have ESPN Bet, we have the casinos as well. You have 8A Casino, you have Kalshi, you have Polymarket, you have eToro, you have Stake, you have Robinhood, you have DraftKings, you have Webull. Essentially, everyone in the internet nowadays is trying to make you gamble your money. This is the game that they're playing for our generation. So you guys are careful. And so this chart right here is a chart of Polymarket. And what I wanted to show you guys here was the distribution in the volume that is being traded in Polymarket. So what are the topics that are most being traded? Is it used for a financial tool? Is it used for gambling? What is it used for? So here we see that the largest section is the pink section, and to no surprise, it is sports betting. So sports betting is the majority of decisions being taken. The orange one is politics. Okay, so it's also not really a surprise. And the blue one is crypto, which is the second largest one. But this is to show that these markets do have some promise, but the majority of them are being used for gambling. The two main players in this space are Polymarket and Kalshi. The difference between these two is that Polymarket is an offshore crypto exchange, and Kalshi is regulated by the CFTC. So the Securities Financial, it's an exchange commission, legally authorized in the US. And we see that the volume of them generally goes in the same direction. We see that over time it's increasing, and now weekly they're trading billions of dollars. So this space is growing by a lot. Talking a bit more about the technicals of how a prediction market works, it's called something, so the design and payoffs, they always trade between 0 and 1. So you can either put 80 cents or 20 cents, is just a basic example. And so if you're betting on winning 80 cents, when the contract executes, you will get back if you win, you will get back your 80 cents plus the difference from that to from 0 to 1. So you'll get your 80 cents and you will win the 20 cents, which comes up to 1. So else, if you put 80 on win and then you end up losing, you lose your 80 cents. So it's a bit complicated and it's inverse, but just know that whatever bet you make, it has to add up to 1. So if you, for example, bet on something that has a 20% probability of winning, when the contract executes, it has to sum to 1. So you put a probability of 20 cents, and then 80 is what you will win. That's your payout. That's how it works. And what these are called, especially in crypto, they're AMMs, which is automated market makers. And this is how the order book usually looks like. I'm showing you guys the technicals of how the market is actually constructed. So this is usually what it looks like, and this is an average order book, and this is what the spread is in any given time, which I show more here. So this is usually what is called the bid, and this is what is called the ask. And you can see that they're always in a constant fight, and they always have a gap in between. And so the gap in between, what you essentially want to make is you want to minimize that as much as you can, so that people can get in this as precise offers as they can. And you do so by having a lot of volume. So what you see usually in these markets is that the more volume you have, the better entries you will get into the market. We can just go over that later. And so these prediction markets are called binary options, basically. And binary options have always existed in the markets. This is simply the way that they're presented in this new way. Traditional options look like this, so you will get zero payment, and then at a certain price, you will start gaining money. What happens with a cash or nothing or a binary option is that you either get zero or you get paid the full amount. So this is different to a traditional option, and these used to be illegal in the US, so that you guys understand. Binary options were illegal, and so it's only now that they're legalized. And the reason why they were illegal is to protect consumers from gambling. And so this again is this whole thing that these gambling markets have been opened up to the public. The other thing that we see is that as we go through in time, this is the odds of the presidential election winner, the volatility starts increasing because the uncertainty becomes higher. As the event comes due, the volatility increases. But there are certain, yes?
So on the last slide, why does the cash or nothing option incentivize Why is it worse for gamblers?
That's usually what is used for gambling because you either win your money or you lose it. There's no in between. It's usually this type of option is very limited in its use cases. Something like traditional options, you can do a lot more hedging. With an option like this, you really don't have a lot of use cases outside of gambling. You either win or lose, that's it. And I'll give an example later of how you can technically use it to hedge, but traditionally the way that these are used was only for casinos. Some people claim that you do have certain edges and that you can make money in these markets. And again, this is going to sound very similar to financial markets. So you either have faster information processing, you have better probability estimation models, or you have insider information advantage. And again, you're either a quant that is trading extremely specific price deviations or probability estimations, or you have some sort of insider information. And so for the general public, no one is going to have this. This is the same ideas as in financial markets. It's pretty much the same thing. And the last slide that I have is how some companies can use this tool as hedging. So there is some actual use case in these tools. For example, if you're a pharmaceutical company awaiting an FDA approval, you can hedge against that downside risk by buying no contracts tied to approval. So if the approval fails on this and the stock drops, you would hedge on that loss by buying a contract here. Another case is, for example, you're a defense contractor exposed to election outcomes, and you could hedge that by trading contracts tied to a specific candidate winning. But all of these actions you can pretty much do through regular financial markets in a much better way. You don't have to enter to these markets that are relatively illiquid. And the other problem is that if you have a huge player like a hedge fund entering one of these markets, they're going to shift the probabilities by a lot. That's it. That is prediction markets. Thank you. Any questions?
So a lot of people get addicted to sports gambling, and I imagine this is going to make that worse. Is there any legislative concerns that this is going to get shut down at any point in the near future?
Well, what we see is that the current administration is very pro-crypto, and we already have a prediction market that is fully regulated by the CFTC. So it doesn't seem like this is going to stop. And you also see these major companies also sponsoring other industries that are addictive, like adult content, so or streaming. And so our generation is just sucked into this social thing in the internet that is concerning.
Another thing that's even more concerning is that a lot of the mainstay crypto platforms have even been adopted prediction markets.
Yeah.
Which is kind of crazy because you buy Coinbase, invest in crypto, now they want you to gamble on it too, which is just what are they?
Yeah.
Yeah.
Yeah, and it didn't used to exist. You used to have to call your broker. Now you just do it through an app. So, and it's gamified. Yeah.
So how does fund market or treasury, how do they get back things?
Sorry?
How they get money?
They get paid on the fund flow. So they're the house. And so they take a cut when you put your position on. They take a small cut.
Oh, okay.
Mm-hmm. That's how they're essentially brokers. So a broker does the same. A broker gets paid on fund flow. That's what it's called, on fund flow, and not the direction of the market.
Another thing I'm thinking is, just for example, the Jesus Christ, that one. If we put
Which
money,
one?
For the Jesus Christ to gambling, and if we put money into here, and we need get the result after a year, during the year, they can get some interest or invest that money. That's another approach. They're kind of like the bank. You
So-
put the money here, and after maybe a month, after a year, you can get your money back. So.
Yeah, so for example, this Jesus Christ one is used as a bond, essentially. So a bond will yield you say 4%. It's supposed to sort of track that. So you invest your money now, and in a year, a bond will repay you what you invested plus the 4%. And this essentially does the same. So when 2017 comes and I invested $100, by that end, it will pay me $4. But then you have to see what else could I have done with the money, and do I want to invest in a tool? What do I prefer? A bet that is called "Will Jesus Arrive?" or a U.S. Treasury. So.
Yeah, when you coming by?
He's busy.